We are live, Mr. Chairman.
Thank you, Mr. Sandoval. I'm going to call the Senate Minerals Committee meeting to order. And I would like to remind the participants that please always address the chair and let's practice dignity and respect to all members. And I don't think we'll have any problem, but those people who are listening out there, please raise your hand and Mr. Sandoval will let you into the meeting. At this point in time, one of the things I've never actually seen before is a committee have almost all of its members out. We have two members out, Senator Anderson and also Senator Beitman. And so in order to pass a bill, we must have 3 positive votes of the committee. So in this particular, Mr. Sandoval.
Mr. Chairman, I just heard from the legal that you only need a majority of those present, so 2 votes.
Okay, well, we stand corrected. We were told earlier that it was different than that. And so we have to have 2 votes in favor. And so one person can vote no. And so we will go ahead. We want to start the meeting and we are going to stay in numerical order. So we will take up House Bill 6, House Bill 8, and then House Bill 9. All of these bills were interim committee studies that we did with Chairman Anderson and Chairman Guru and the Joint Interim Committee. And so let's go ahead and start with House Bill 6, Trust Company Amendments. And is there anyone who would like to introduce the bill?
Mr. Chairman, point of order. I don't think we took roll yet, unless I just
I'm sorry.
out of rote memory.
Thank you very much. Let's go ahead and take roll.
Thanks, Mr. Chairman.
Thank you, Mr. Chairman. Senator Anderson.
Absent.
Senator Cooper.
Excused.
Senator Rothfuss.
Here.
Chairman Wasserberger.
Here.
And Vice Chairman Beitman.
Excused.
Yeah.
You have a quorum, Mr. Chairman.
Well, thank you. Okay, for the first bill for our consideration is House Bill 6, Trust Company Amendments. Is there anyone who would like to introduce the bill? Senator Rothfuss.
Thanks, Mr. Chairman. And it looks like we have Division of Banking, so they can walk through the details. But before we, and we should probably bring them in to run through the nuances of the bill. But the key concept, and we worked this pretty well in the off season, is obviously we've done a lot of work on regulated trust companies over the past few years, and supervised trust companies, as we call them, and have grown that industry substantially in the state of Wyoming. We've become a national leader in trust companies based on our updated statutes and how well they've been administered through the Division of Banking. This is some further work that we worked on with the Division of Banking during the interim to provide clarity on mergers and acquisitions related to trust companies and how those would be managed, and really just lays out a new section of statute to provide for that type of circumstance, and then conforms statute thereafter to ensure that the newly created entity and during the transition, the entity is appropriately regulated. And then one other key provision, because of the fact that we've been really moving heavily towards regulated trusts and increasing the responsibilities of the Division of Banking with regard to regulated trusts, is the language change in 13-1-604, where we've expanded, or we would expand, the state banking board by an additional member to ensure that we've got a representative of a public trust company, and that we have expertise by public trust companies on the banking board, just so that they have broader purview. So I think that's a general summary. And then if we do have Commissioner Faulkner here, and it looks like he's just popping in right now, and his team, then we can walk through the details of how that's done. But I think this is it's just a great intuitive step forward for us as we further expand our capacity to work with supervised trusts in the state.
Okay, can I have any further questions or comments by the committee? If we could recognize Director Faulkner at this time to take us through the bill or tell us the important parts of the bill.
Thank you, Acting Chairman Wasserberger. Albert Faulkner here, Banking Commissioner with the Division of Banking, and I have with our two deputies, Jeremiah Bishop and Joe Mulberry, that supervise our bank and non-bank area. Senator Rothfuss did a good job giving a high-level overview. If I might, Mr. Chairman, I'll just give a touch on a few of the high points one more time, and then we'll be able to stand for any questions. Senator Rothfuss was correct. We're averaging 3 or 4 new trust companies formed in Wyoming each year. There are 2 charter types in the state. There are public trust companies, which are open, as the name implies, to the public and do your traditional trust business that way. Some of them do have specialized activities, but they are not limited to a single family. The other charter type is the chartered family trust company, and that is, as the name again applies, that it usually ultra high net worth families, it depends upon where they are in the generational line, can form a regulated entity, and they're basically subjecting themselves to the same regulatory oversight as a public company, but with a different goal in mind. But so we revised these statutes last year, I believe it was, maybe 2 years ago now, and restructured them, modernized them. And so we use the term supervised trust company. And the point of that was so there wasn't as much duplication. So those things that apply to both regulated public trust companies and regulated family trust companies, we don't have to have 2 sets of definitions along those lines. So every now and then you'll see supervised trust company, and that's what that means. So, Mr. Chairman, Section 1 is new language that is governing mergers and acquisitions. What we found is that we didn't have any clarity there, and in the past, because we didn't have as many trust companies and they weren't looking for any mergers or acquisitions, it really wasn't an issue. Nevertheless, this last year, we had one regulated company that was looking at potentially, and is still looking at, acquiring another trust company that's operating in another state. And so when we were talking with their counsel, didn't really have a clear path to do that. So that's what pages 2 through 9 deal with. This lays out how a merger or an acquisition of a Wyoming regulated trust company would occur. And it contemplates really an out-of-state trust company, but the same concept could be if 2 Wyoming companies merged. So that's new language. So a lot of it's based on our banking merger and acquisition language. And then we also looked around, we looked at South Dakota, which is probably the top side. They have, as far as number of trust companies, probably the largest number anywhere in the country. We work well with that agency up there. They've helped us in the past. So we took some of their language, made a lot of sense on the merger acquisition part of it. So that's what pages 2 through 9 are. Section 2, starting at page 10, that is, as Senator Rothfuss said, changing the banking board composition just a little bit. In Wyoming, we have 30 banks that are domiciled in the state. 25 of those are state chartered, and then 5 are nationally chartered or federal thrifts, federal savings banks, if you will. So you can see we're doing 2 different things. Oh, and I should say back. So we have, as of, I think this week or next, we'll have 20 trust companies. We have 3 more applications on my desk right now, pending. So the numbers are getting up there. They're north of 200 trust 16 billion of assets under management. And so compare that to our banks that, of those 25 state charter banks, I think only 5 exercise their trust powers. And I'm not even sure if we've hit a combined total assets under management of $1 billion in the trust one. So obviously a lot of trust work is being done in the non-depository trust companies. So all charters for public, whether it's a public bank or a public trust company, go before the state banking board. And we're to the point now that we think that there should be some representation of the trust industry, as that's the fastest growing for sure right now in the state, and given the numbers and the assets under management. So that's the proposal, is to add one more appointed member to that. The other issue that we're running with is just the composition. Right now, it's made up of 4 bankers, 4 state charter banks, 1 national bank, and then 2 members of the public, and then the ex officio members, the director of the department. We're getting fewer and fewer national banks to pick from, and or that someone that wants to dedicate the time. So instead of saying that it's got to be 4 and 1, we're just proposing 5 bankers be appointed. So it doesn't necessarily have to be all, that mix. It could be 3 and 2 for that matter. So anyway, just make it a little bit easier. So down the road, if either we can't find a national bank, or if they continue to convert, we run out of national banks, we've accounted for that and are able to have a fully staffed banking board. So that is the section 2. Moving on to page 11, did a couple things here. The first one, starting on looks like line 6, we're expanding the definition of trust company to include a foreign trust company that's already formed outside of Wyoming, that's authorized to do business in Wyoming. So they'll still have to have one. So if you think about it, in an instance where we've had a trust company, maybe an unregulated family trust company formed outside the state, wants to set up a regulated trust company in Wyoming, they don't dissolve that corporation and then reincorporate. It just allows to recognize that existing structure. It would still be subject to Wyoming trust company statutes. Down about the middle of the page, starting on line 14, this here is, as we looked at the exposure to the state, with non-depository trust companies, you don't have a receiver like the FDIC is for banks. So if a trust company were to fail, it's the state that takes that into receivership and resolution of that company. And it can be a very, very, very costly endeavor to do so. And we've heard horror stories from my colleagues around the country. So what we're trying to propose, or what we're proposing here, is to, if it's in the best interest of the state of Wyoming and protects the state, to be able to direct this failing trust company into bankruptcy court. And so that, again, hopefully we don't even have to deal with that, but we're trying to plan in case that were to happen. So then the bankruptcy court would work on the resolution of that and hopefully save the state money, because it would come out of state funds. And then the bottom of the page there, the section 13.5501, as the title says, formation and organizational instruments. Again, that section of the law contemplates, or had contemplated up to this point, forming a new company in Wyoming, and then all of the things you have to do in order to get organized. Well, again, if you go back and think about if this company, say a family company, was formed in Delaware, and they want to move it and be a chartered family company in Wyoming, again, this would allow that existing family that has been created, family corporation, to fall underneath the and be recognized under 13.5501. And then, Mr. Chairman, the last thing that I want to speak to is that the bottom of page 12, this really just clarifies the minimum number of meetings that chartered family trust companies have to have, and again, it's a statutory minimum. Depending upon how complex and the activities, there could be more, and there usually are more required. And then it also recognizes that they can hold those meetings virtually, since that's what the world that we're living in right now. It just makes it very clear that they have the authority to do so. And that is the bill, Mr. Chairman. So at this point, I'll stand for any questions.
Any questions for Director Faulkner? Senator Rothfuss. Thank
you, Mr. Chairman. Director, on the insolvency page 11, 13.5, 417, it's the first time I really kind of contemplated the fact that we don't have any type of bailout fund available. And I don't know that we have regulatory fees that can be used to create a backstop fund to provide resources to unwind an insolvent trust. Is that something we should look at in the future? I don't know that we need it right now, but as we're getting more, when we're to the point where we've got 20 moving towards 25 regulated trust companies, should we be looking at a scheme of backstop that's more similar to our state chartered banks?
Mr. Chairman, Senator Rothfuss, so we do have a fund established, and this is, you have to go back in the recesses of time a little bit. Probably, I think 2015, we created a trust company resolution fund, and a portion of their fee goes into a quarter of the fee they pay, the supervisory fee. Well, all of our trust companies pay, all but one, I think, pay $7,500 a year, which that's a whole nother story. We're have to reevaluate that as this is growing. But anyway, so a quarter of that goes into this fund. So you can imagine, less than $2,000 a year from 20 companies isn't going to build a fund up quickly. We did have some funds available in our reserve account, and we also received some settlement funds a few years back, and we put that in the resolution fund. We're at just about $1 million in that resolution fund. I can tell you the stories that we've heard from other states is that's a drop in the bucket. I know, or granted, it all depends upon the size and complexity of the company that fails, right? But the smallest one we saw was in Vermont or New Hampshire. It was, I think it cost that state about $4 million. And the largest we've heard of in recent history was in Illinois. I think they're just winding it up. It was about 17 years to wind down the trust company, and it cost them nearly $20 million. So now that was a kind of an anomaly, but tells you that there's potential out there. None of our companies are near the size of that one that failed, but the idea was just to start preparing the state. So we do have that fund, and we'll continue to build it. And actually, we're getting to the point where we're even gonna contemplate, other sort of insurance mechanisms possible for the state.
Okay, Mr. Chairman,
Senator Roth.
Commissioner, that was going to be my next question, was some type of an insurance provision to provide a backstop to augment the fund. So it sounds like at least we've got the fund started. There's a little bit of there are some resources available, but ensuring that if we have a $20 million circumstance, that we're not on the hook for the full $20 million might seem like a good long-term game plan. And I don't think we need to do anything with this legislation to get there, but that is something I guess I'd ask for the next interim to contemplate, if there's any statutory changes that we need to make to get you to the point where you've got the tools to provide that surety.
Mr. Chairman, if I might, one of the things that we are contemplating is, and I think we'd have to have a change in the insurance statutes, is my understanding, is a captive insurance. I know the state of South Dakota created one for themselves. Right. And so I don't think we have that ability now, but those are types of things we'll continue to look at. And I'd even like to see if there's reinsurance possibilities for the state of Wyoming. I don't know if we are, but we're at this point just want to make sure that protections are in place.
Yep. Great. Thank you.
Any further questions by the committee? Is there any further comment by the public? Is there anybody in the waiting room?
Mr. Chairman, it looks like Scott Weaver's coming in.
Mr. Weaver. Mr. Weaver.
Thank you, Mr. Chairman. Apologies, it took me a moment to get my video enabled there. Thank you, Mr. Chairman and committee members. I appreciate the opportunity to appear before you this morning to speak in support of House Bill 6. I'm the General Counsel and Chief Fiduciary Officer at Willow Street Group and Willow Street Trust Company of Wyoming, which is a public chartered and supervised trust company. And I'm here today on behalf both of Willow Street as well as on behalf of the Wyoming Trust Association, of which Willow Street is a founding member and of which I serve as a director. As you know, and as Commissioner Faulkner and Senator Rothfuss have previously noted, the financial services industry remains a bright spot in our state economy, and trust in particular has experienced robust growth due to our reputation and the work of Commissioner Faulkner and our state legislature to maintain and enhance Wyoming as a leading jurisdiction for wealth transfer planning. Both the Wyoming Trust Association and Willow Street support strong and effective regulation to ensure that the safety and soundness of the banking, trust, and financial services industry, and to empower the division and Commissioner Faulkner to effectively steward our jurisdiction. The financial services industry generally, and the trust industry in particular, offer positive economic and employment benefits to our state and its citizens. For example, during 2020, and this is COVID notwithstanding, our firm hired 8 new full-time professional staff, representing nearly a 30% increase in our total staffing. And we anticipate adding an additional 5 to 6 full-time professional positions again in 2021. And in addition, both Willow Street and our colleagues in the trust industry collaborate with other Wyoming professional service providers, including attorneys, accountants, asset managers, and our clients also use state chartered depository institutions. Just by way of example, at Willow Street, we work closely with McGee, Hearn and Pies in Cheyenne. And so we believe that our industry provides spillover benefits to other professional service businesses in the state. There are 2 key provisions of House Bill 6 that I'd like to highlight. First, we believe that Commissioner Faulkner and his colleagues would benefit from clear and additional statutory authority to enhance the division's supervision of regulated trust company activity. And the proposed section 135426 and related amendments are in furtherance of the division's objectives and provide the commissioner with clear authority to oversee and regulate mergers of trust companies organized or operating within the state. Second, we're in favor of the proposed modification to 131604 to provide for a representative of our industry on the state banking board. The board is presently comprised of representatives from state banks and members of the public. And our belief is that adding representation on behalf of the non-depository trust industry will bring both subject matter expertise and experience to the board in recognition and furtherance of the growth in our industry. So in closing, thank you very much for the opportunity to comment. And I urge the adoption of House Bill 6 and will stand for any questions from the committee. Thank you, Mr. Chairman.
Questions by the committee? Senator Rothfuss.
Thank you, Mr. Chairman. Mr. Weaver, I'll just say thanks. We appreciate you providing that testimony and for the involvement of the State Trust Organization and your entity. And I'd invite you and your organization as well to start engaging with the Blockchain and FinTech Select Committee and trying to find some ways that we can improve and augment the capabilities there with your organization. So keep an eye out for those opportunities.
Further questions by the committee? Well, thank you, Mr. Weaver, for your testimony. I was wondering if you have a prepared statement that if you could send that to me and I will send it to other members of the committee.
Mr. Chairman, thank you very much for the opportunity. I'll be glad to send you a written copy of my remarks, which are not quite verbatim. Senator Rothfuss, thank you also for your comments and your invitation, and we'd be very pleased to take you up on that.
Super. Maybe that could be an interim study coming up next summer.
And Mr. Chairman, one question of logistics. Should I send these comments to you directly?
Yeah, send them to my legislative website and I will get them to Senator Cooper and Senator Rothfuss.
Very good, I'll do so.
Okay, thank you. All right, further questions by the committee? Is there any further public comment? Okay, members of the committee, let's go ahead and get started. Let's work this bill. Do we have any amendments at this time?
Mr. Chairman, I move the bill.
Is there a second?
Second.
It's been moved by Senator Rothfuss and seconded by Senator Cooper. At this point in time, Any further amendments? Question being called. Let's have a roll call vote. Mr. Sandoval, if you could call the roll.
Mr. Chairman, this is a roll call vote on House Bill 6. Senator Anderson.
Absent.
Senator Biden.
Excused.
Senator Cooper.
Aye.
Senator Rothfuss.
Aye.
Acting Chairman Wasserburton.
Aye. And Mr. Sandoval, something's wrong with your audio. I'm not sure what's going on. But we can kind of hear you, but you're,
Mr. Chairman, is that better?
No.
No.
You've got a cool robot thing going.
we can understand you. You just sound kind of funky.
Mr. Chairman, I'll work on that.
Okay. All right. The next bill for our consideration. Take a brief moment to thank Mr. Weaver and Director Faulkner for testifying today before the committee. We'll go ahead and move on to House Bill 8, which is Consumer Credit Amendments. Would anybody like to introduce the bill? Senator Rothfuss.
Thank you, Mr. Chairman. And 1 second while I get the right bill in front of me. My apologies. There it is. Okay. Mr. Chairman, again, we'll have Division of Banking walk us through the details of this. And we worked this pretty well during the interim. We had a working group of the Joint Minerals Committee, spent some extra time on this, gathering the stakeholders in the industry as well as the Division of Banking to work through some language. But there are a couple of key concepts here that are being moved forward through this legislation. And then I think there's a good bit of cleanup here as well. On page 2 and onto page 3 is some updated language or updated provisions in statute that provide for clarity around refunds of certain credit insurance products that were prepaid for, which requires that that consumer credit repayment or refund, I should say, be paid within 60 days of the cancellation period, and there was uncertainty in that. So that's one of the key provisions where it provides additional consumer protection. There's further language elsewhere that ties into this that provides that be paid back on a pro rata basis unless the creditor and the Division of Banking agree to some alternative scheme of repayment depending on risk evaluation, which that took a little bit of time on the working group to get that language appropriate. That's actually the B paragraph on page 3 that gets into that. A lot of the rest I'm going to leave up to the Division of Banking to go through the nuances of the new language and conforming changes, but it gets into repayment terms, calendar, timeline, some changes to prior fees that have become obsolete on page 8, for example. There was a 50-cent administrative fee per month that can now go up to $3 per month of administrative fee. And it's my understanding that hadn't been changed for quite a long time. So it's more accounting for inflation than anything else. And with that, I think let's just invite in the Division of Banking to go through the rest of the details and key changes. I think I'll stop there with that introduction, but I'll note that there was general agreement that what we're working on in here is either positive for all stakeholders, even if not perfect, is where we arrived at. Positive, but perhaps not perfect for everybody. And most of it really is updates, conforming language, modernization, without too many substantive policy changes. I would say it's more of a modernization bill. And I'll stop there and we'll go to the walkthrough.
Okay, thank you, Senator Rothfuss. Just a quick bookkeeping. I would like to ask Senator Cooper if he would be willing to floor manage House Bill 6, the previous bill.
Yes, sir. I'll be glad to do that.
right,
Mr. Chairman, I'll be glad to do that for you.
Thank you very much, Senator. Let's go to Director Faulkner. Director Faulkner, you have the floor.
Thank you again, Acting Chairman Wasserberger. Senator Rothfuss was correct. There's a lot of cleanup here. There's some consolidation, streamlining, trying to, in order to improve, we think the legislative language, which then also improve our ability to administer it. I will say, Mr. Chairman, if the committee members might recall, last week we went through that small banking fee bill really quick, and then the bill that you just took action on, the trust fee, was fairly straightforward. All of that was done in that order to lull you into a false sense of security about the complexity of this bill. So this one here, there's a lot of moving parts, Mr. Chairman, and that's kind of part of what happens as an industry evolves and expands, but also when we don't take action on something for a number of years. So that's why the bill has the depth and breadth that it has. Senator Rothfuss is correct. We did, in the interim, work with a subgroup of stakeholders, our office, and some representatives from the committee and in the industry. So what I'm going to do, Mr. Chairman, is I'm going to turn the walkthrough over to my deputy commissioner on our non-bank side, who oversees this portion of the law, Joe Mulberry, to my left, and let him kind of walk us through the bill at a high level.
Mr. Mulberry, you have the floor.
Thank you, Mr. Chairman. And as Commissioner Faulkner said, yes, the Wyoming Uniform Consumer Credit Code was passed and adopted here in Wyoming in 1971, and it was based on model law that was drafted by the Uniform Law Commission in 1968. Some of the provisions that are still within the law are those original provisions from 1968. So we're trying to go through, create some efficiencies, get rid of some antiquated language by repealing some sections. And that's the main purpose of the bill. And so I'll just kind of walk you through. It's quite a lengthy bill, and I'll just kind of briefly walk you through each of the sections. And if anybody has any questions on it, I'd be happy to answer any questions. As Senator Rothfuss said, the beginning sections on page 2 and 3 are dealing with the refunding of certain ancillary products that are sold in conjunction with consumer credit sales and consumer loans, and the processes for doing that. On page 4, lines 8 and 9 is to delete some references to consumer related loans and consumer related sales. There's certain other provisions within the act that are antiquated, and they're not necessary and confusing, and they cause regulatory inefficiency. So we're recommending a repeal of those. And so those lines 8 and 9 are just to repeal the references to those sections. On page 4, lines 19 through 22 is to make consistent in all of our laws our statutory citation to depository institutions. So that's the same that we use in other laws under our purview. On page 5, lines 1 and 2 is to clarify for late payment charges that the current installment is the period between 2 regularly scheduled payments. Lines 4 through 10, the Consumer Credit Code applies to creditors who are regularly engaged in extending consumer credit. This definition that we're adding is to clarify how that term is currently enforced, and it matches the standard that's currently in place under the federal regulation Z, which is truth in lending for the disclosure of credit-related items. Line 21 on page 5 through Page 6, line 8 is a technical change to just include the new definitions that are part of this act into the index of definitions in the law. Page 6, line 14 is to delete a reference again to consumer credit related or consumer related sales, as that provision is being repealed. Page 6, lines 16 through 18 is clarification language to clarify the current requirement that persons making consumer credit sales or leases need to register with the Division of Banking. Again, that's the current requirement. There's some confusion about that, and so we're just trying to put some clarification language to create some regulatory efficiency within the act itself. Page 7, lines 7 and 8 is to delete the inefficient language that doesn't come into play and limit the coverage of the Wyoming Uniform Consumer Credit Code to consumer sales under of $75,000 and less, and removing the other provisions that cause regulatory difficulty and inefficiency. Page 7, line 16 through page 8, line 3. This is again what Senator Rothfuss was just talking about, where the minimum finance charge of a revolving revolving charge account, and then there's subsequent language in revolving loan accounts as well in the act to change the minimum finance charge from the original 50 cents up to $3. Page 8, lines 11 through 16 is clarification language. The Military Lending Act enforcement is already contained within the Uniform Consumer Credit Code under Article 3 for loans. There's been some changes to the Federal Military Lending Act that makes it apply in certain situations to sales transactions. And so because we have the authority to enforce it under Article 3 for loans, we're just making the subsequent change to put the authority also in Article 2 for sales to match the changes in the Military Lending Act. On page lines 21 and 22 on page 8, it's clarification language again to just delete the reference to that's section 4014-523, as that section was actually repealed from the Uniform Consumer Credit Code back in 2013. Page 9, lines 6 through 12 is clarification language to specifically state in the statute that payment servicers are not required to be licensed as a sales finance company, and that a company holding a lending license under Section 302 can also engage in sales financing without having to obtain a second license and having to pay 2 licensing fees. Lines 15 through 23 on page 9 is clarification language that a depository institution, and again, lenders under 302 can engage in sales financing without obtaining that second license. So that's covered in a couple of different areas. Page 10, lines 5 and 6 is deleting the reference to consumer related loans, as that section is being repealed. Lines 8 through 13 is to change the confusing and inefficient distinction between consumer loans and supervised loans, and to make all lending covered in one section that requiring a licensing for all consumer lenders. So within the lending section, there's 2 very confusing sections. Some loans are considered to be consumer loans, some are deemed supervised loans. The only distinction between the 2 are that a consumer loan is a loan where the consumer loan where the rate on the transaction is less than 10%. That same loan, if the rate is more than 10%, then is classified as supervised loan. So we have 2 sections that essentially, and then we have to have duplicate language in each section to essentially do the same thing. So we're just trying to consolidate all of that and put everything into a more clear section covering it all as just consumer lending. Let's see, page 10, line 21.
Mr. Chairman?
Excuse me, Senator Rothfuss.
Thank you, Mr. Chairman. And before we go on, so as I understand it, Mr. Mulberry, then with regard to the consumer loan versus supervised loan, one of the keys to this is to eliminate the two categories and make everything a consumer loan. So after this, everything, regardless of the interest rate, becomes a consumer loan for clarity. And there is no longer an independent supervised loan concept as something separate. Is that accurate?
That's correct. Yes.
Thank you.
Deputy Mulberry.
So just continuing on, the bottom of page 10, the line 21, and then also on page 11, lines 14 through 22. This is to provide some clarification language that first lien mortgage loans to acquire ownership and property are not covered under the Wyoming UCCC. Those are actually covered under a separate body of law, the Wyoming Residential Mortgage Practices Act. Page 11, lines 9 through 12 is to delete inefficient language that doesn't come into play. Again, same thing that we saw in the sales side comes into play in Article 3 for loans where we're just limiting the amount of coverage under the UCCC to consumer loans of $75,000 and under. Page 12, lines 3, and actually this is a big chunk of it. And so the next sections of page 12, lines 3 through page 20, line 3. These are all of the conforming changes that are necessary to do what we were just talking about, of taking two different groups of regulation, being consumer loans or supervised loans, and consolidating them into just one section. So all of these changes are necessary to just effectuate that one change that we're doing. Page 20, lines 16 through 18 is again just providing some clarification. This is where the citation of the Military Lending Act is currently in the law for the loan section, and we're making a change just to clarify the actual citation to the Military Lending Act. Page 21, lines 1 and 2 and lines 7 through 11 are technical changes for the creation that are needed for the new creation of the new section 454, which was already covered it on page 2 of the bill. Page 22, line 3 through page 25, line 20 is again just some additional changes that are necessary with the intention of removing reference to consumer and supervised loans and making everything just the one uniform consumer loan. So that's through page 25, line 20. Page 26. Line 7 and 8 is a technical change to address the repeal again of the consumer-related sales and consumer-related loans. Lines 22 and 23 are to exclude all depository institutions from the requirement to file an annual notification report and pay the annual fee, as this requirement cannot be applied to federally chartered institutions, and the annual banking supervisory fees paid by state chartered banks to the division adequately accounts for the administration of the Wyoming Uniform Consumer Credit Code. Page 27, lines 8 and 9 are a technical change, as the Office of Thrift Supervision no longer exists. So we're just removing the reference to that section. And then finally, the page 28, lines 8 and 9 is just a technical change, as with the changes that we're proposing in the repealing of sections, the new ending section of the Wyoming Uniform Consumer Credit Code will now be section 649 rather than section 702. So, Mr. Chairman, that's kind of an overview of all of the changes that are contained within the bill, and I'd be happy to answer any questions.
Thank you, Mr. Director, or Deputy Director Mulberry. Are there any questions by the committee? Senator Rothfuss.
Thanks, Mr. Chairman. And Deputy Mulberry, will you send me your notes so that I can dig into those answers if anybody asks on the floor for some of the particulars? And do you have an outline of the repealers in section 3 of what each of those is doing. It sounds like, to my understanding, is that each and all of the repealers are associated with the consumer versus supervised discussion. Is there any exception to that?
Deputy Mulberry.
Mr. Chairman, you're correct. I believe that the majority of those are dealing with that, getting rid of the consumer loan and supervised loan. So that's the majority of the repealers. I can't speak right now that is that all of them, but I will definitely go through there and send to you any of those that are, different. And if it's different, it's just because it's a section that we've looked at. And again, it's just antiquated language, and we say that it doesn't come into play. So we're just trying to make a more efficient act. And so we're just removing it. So there may be a few of those, but I think the majority of our changes are dealing with the consolidation of the two, consumer loan and supervised loan, into one section.
Great. Thank you, Mr. Chairman. Follow-up question?
Senator Rothfuss.
Thank you. Would you say there's any new policy in here, or is this, which it seems to me, trying to bring the statute to conform with reality at this point after what, 50 years of not updating the UCCC? And I guess the one exception is the new language of the 60 days, but that's the only real new policy I see. Everything else seems like it's modernization, updating and conforming statute with reality.
Deputy Mulberry.
Mr. Chairman, yes, I would agree with that. We're not adding anything. I'm just thinking back when we made other changes to this law, back in the day when all of a sudden payday lending became something new, and we had to go in and specifically add a section dealing with payday lending, right? There's nothing new along those lines. I think most of the changes that we're doing, like you said, are just kind of conforming and trying to make it a little bit more efficient.
Mr. Chairman, if I might as well, Albert Faulkner.
Director Faulkner.
I wouldn't say it's a significant policy shift, although on page 26, lines 22 and 23, where it exempts supervised financial institutions, which are defined basically as state charter banks. Because right now, if I were to go out and buy a vehicle or an RV, often that can get assigned to a bank. So if it gets assigned to a national bank or a credit union, they have preemptive authority over the state law. So therefore, the notification fee that goes along with that assignment is paid by the original creditor, so the RV dealer, the car dealer, could be furniture, things like that. Anyone who provides credit, so they would pay the notification fee. That's part of the how we're funded, is this annual volume fee, if you will. And now state charter banks, so if it gets assigned to them, they weren't, up to this point, they're not exempt. So then the burden shifts to the state charter bank, and so the dealer no longer pays for it. The bank does. So what we looked at and said, well, in order to maintain parity amongst all financial institutions, we're proposing exempting out the state charter banks, because again, they pay a semi-annual supervisory assessment. And now there's when we did that, we didn't really contemplate, and a representative from the Automobile Dealers Association might be testifying. We didn't really contemplate the shift of that burden back to their membership. The reality of it is, about last year, based on last year's volume, was $13,000 that an auto dealers had to pay. And so then on the House side, there was an amendment that was proposed to kind of alleviate that, but the proposal actually made any assignment fee exempt, and so it would have had about just shy of a $200,000 impact to our budget. So they got that taken back out as a floor amendment, second reading amendment. But so we're back to the original language that the subcommittee and then the interim committee came up with here on page 26. So that would be, again, a long way of saying it's not really a major policy shift. There's just that burden of again, $13,000 shifts to to the automobile dealers that any assignments made to a state charter bank.
Senator Rothfuss, further questions?
Thanks, Mr. Chairman. So as we start to contemplate the use of this is something we talked through in the interim was kind of the use cases and where lines are drawn. We've got the $75,000 maximum on this. So if I'm buying an $80,000 vehicle or an $80,000 RV, walk me through the differences where this consumer credit, this UCCC code is no longer going to apply to that credit line. So that'll be my first question is, can you help us to recall the delineation there of once I get over $75,000, how do things change for me?
Director Faulkner or Deputy Mulberry?
Yeah, thank you, Mr. Chairman. So yes, we had that discussion, and currently the code applies to consumer credit transactions of $75,000 or less. We've changed that over the years. When I first started, I've worked for the division for 28 years now. When I first started, that dollar threshold was $25,000. At some point, we moved it to $50,000, and now it's at the current $75,000. So the application of that, like Senator Rothfuss said, is that if somebody buys a vehicle, for example, that is more than $75,000, then the Uniform Consumer Credit Code, the provisions of the code just don't apply to that transaction. And so I guess that is, that's the application of that. And so you can have the discussion about whether or not that, and I know that there was some discussion about, does that need to be increased? I think any dollar amount, if you're going to set any kind of dollar amount, you always have in theory, what if another transaction goes above that threshold? And so it seems like that the $75,000 threshold is currently sufficient, that we're covering the majority of consumer credit transactions that I think that this act was designed to regulate.
Any further questions?
Yeah,
Senator
Mr. Chairman, just following up on that, Joe, will you kind of provide a little bit of detail, though, of what I lose when it's no longer supervised by the UCCC? So in other words, if I've got that $80,000 transaction, what types of protections as a consumer don't I have in place any longer? What are the key aspects of the UCCC that obviously you're still regulating that $80,000 transaction too, but you're going to regulate it differently?
Deputy Director Mulberry.
Sure. Thank you, Mr. Chairman. So I guess on the $80,000 consumer loan right now, we wouldn't exercise any regulatory authority. If somebody called and said, I did a consumer credit transaction for $80,000, we would look at the nature of that. But once we established that it was a consumer credit transaction of $80,000, we cannot apply the provisions of the Uniform Consumer Credit Code to that transaction. And so at that point, we just don't have any regulatory jurisdiction in that transaction. Again, I can't recall ever being in that situation where we've turned somebody down. I don't think that that's ever really come into play for us, where we've had to tell somebody that, oh, you bought something and had a problem with it, but yet we can't help you with your problem. I'm not sure if I'm answering your question.
Senator Rothfuss.
Thank you, Mr. Chairman. So that gets kind of to the point of, is the $75,000 enough? And you feel at this point in time that still is a sufficient level of consumer protection if we're not really providing consumer protection for which is odd, right? I mean, I think I can at this point in time go get a nice new Super Crew truck or something that exceeds 75, and all of a sudden I've gone, just to the level where I no longer have any consumer protection on the credit. What have we used as our criteria in the past, for that threshold? Do we have a sense of that?
Deputy Director Mulberry.
Yeah, thank you, Mr. Chairman. I think it's just been trying to take the initial assessment of the dollar threshold that was originally drafted in 1968 of 25,000 and just trying to adjust it, by inflation over time. And I think even when you do the inflationary adjustment, we wouldn't even be up to the $75,000. I think that we're still above the $75,000 threshold if you just took that to apply that to the dollar threshold. I think what we're anytime that we've looked at this, we try to look at what is the threshold that covers the majority of consumer credit transactions out there. And as prices of things keep increasing, then I think you do start getting upwards of that $75,000 threshold. Even though there are vehicles that do exceed that $75,000. You're always going to have that situation. I think the 75,000 addresses the majority of transactions. I think another theory is that when you start getting into that kind of a dollar amount, a consumer that is financially capable of entering into that transaction probably has a little bit more financial, experience and knowledge of what they're doing in those transactions.
Okay, thanks, Mr. Chairman. And one other line of questions, Mr. Chairman, on the new 454 section. Can you provide us with a couple of examples of how that might play out, and what I could be buying as this insurance concept or consumer protection concept that this could apply to, it seems like we talked about vehicles previously. It seems like we talked about cell phones. Can you walk us through a couple of concepts of how the new 454 might happen, just so we have that in mind?
Deputy Director Mulberry.
Sure. Thank you, Mr. Chairman. So yeah, the common things that we see are for those kind of products to be sold in conjunction with, I guess could be a variety of things. It could be sales transactions. I go in and I finance the purchase of an automobile, or at a furniture store, the purchase of furniture. And so in connection with that, then, when I'm borrowing $50,000 to buy a car or $20,000 to buy some new furniture, then there's some ancillary products that can be sold in those transactions to provide me some protection. Credit, life, and disability insurance are examples of that. Whereas if I buy these products, then if somehow I become disabled, then that coverage kicks in and they'll make my payments for me under the transaction. If I buy the credit life insurance and I die, then it'll pay off my obligation in full. In automobile transactions, gap waivers are sold so that if you happen to total the vehicle, for example, and your insurance, the value of the property was less than the amount outstanding on the loan, and so when your insurance makes the payment, you still have this gap that's there for the amount that's still owed. And so there's a product that would provide for that. So anytime you purchase these, and these are all optional products, they all have a cost that's associated to them. And so then this section comes into play when we're dealing with the termination of those. The termination usually occurs as a result of the termination of the credit transaction itself. So when I pay off my loan or the sales transaction in full, I no longer need the credit, life, and disability insurance because there's nothing else to cover. So if I purchased a product that provided me coverage on my transaction, say it was a 4-year contract, and we added these products on there, and say that I happen to pay off the transactions after 2 years, then at some point then I'm entitled to a refund of some portion of those initial premiums that I paid for those products. Now, that's what's going to come into play about what's the appropriate method for those refunds, whether it's pro rata or another provision. But essentially, that's the situation that can come into play where I'm entitled to the refund, is because I've canceled the credit transaction and those products are no longer needed, or the consumer defaults in the transaction. If the consumer defaults in the transaction, then those cancels will be canceled, or those products will be canceled. Those refunds could be applied to the amount outstanding back to the creditor. The other thing that can come into play on these is because it's an optionally purchased product that I decided to purchase and then add the cost of that onto my loan. I can then consumers sometimes just decide, I bought this as part of my loan. I wish I hadn't done that. So I'm going to contact the provider of that, and I'm just going to cancel it today. Even though my loan is going to continue, I'm going to cancel my coverage of this. And so if they cancel it at any point, then there has to be a calculation of what was earned and what was covered. And then the unearned portion from cancellation going forward has to be refunded back to the consumer. So, Mr. Chairman, those are the kind of issues that we're dealing with this new section.
Thank you very much. I'm good.
Thank you, Senator Rothfuss, for your questions, and thank you, Deputy Director Mulberry. Any further questions by the committee? If no further questions by the committee, I have a question. And the question is, there is a fiscal note on this bill where there is a loss of revenue in 2022 at 69,000, and 2023 70,000, 2024 71,000, almost 72,000. And I was wondering, Deputy Director Mulberry, if you could explain why that loss of revenue is.
I think it's dealing with the removal of the notification.
Oh, right, yeah. Oh, yeah. So sorry, Mr. Chairman, it took me to think about that one. Yeah, so that was dealing with the exempting the state chartered banks out of the notification process, notification fee that's on page 26, the bottom of page 26. And so that's, again, since those banks pay us a supervisory fee, we're comfortable that amount can be captured in that other supervisory fee. I will say, again, understanding how that when we propose that it does shift some of the burden to the original creditor. And then there was ways to try to address it and things of that nature. If it ends up being a real sticking point, either for the other association or the body, we can always, we've talked about it. We're fine even just repealing lines 22 and 23 to where it keeps it at the status quo. So yeah, the banks would continue to pay it, but some of those banks are out-of-state state charter banks that pay it, so it's not an impact to ours. The dealerships aren't picking up any additional burden, so that part would be status quo. So if through your discussions and deliberations, if you've got concerns with it, again, this was just a proposal. We're fine with it. We're not saying you have to, obviously, one way or the other. We think that this is the fair way for the charters and the banks, but I know it's caused some concern with the dealerships association.
Okay, just real quick. So what you're saying is consumer loan fees would no longer be paid by state chartered banks to a certain extent. Is that correct?
Mr. Chairman, as it's worded right now, as 26 lines 22 and 23, they would exempt out. As of today, but prior to this bill passing, would be they continue to pay that fee.
Okay. All right. Well, thank you. I was just wondering why that was. Further questions by the committee? And let's go to Mr. Sandoval. Is there further testimony by the public?
Mr. Chairman, there are two public testifiers.
Okay, if we could hear from Mr. Dave Pickard. Mr. Pickard, you have the floor.
Thank you, Mr. Chairman, members of the committee. My name is Dave Pickard. I'm representing the Mountain West Credit Union Association. and the GAP Alliance, which is the Guaranteed Asset Protection Alliance, made up of all the vendors that provide those products. First, I'd like to make a couple of comments. I certainly appreciate the interim committee's work on this piece of legislation. It came out again as revisions and conforming to reality, Senator Rothfuss, of the Uniform Code, but by no means are the two first pages anything but uniform. And I'll get to that in just a minute. But I do appreciate all of the effort by the division and the committee in working through a lot of the amendments that we did, not only in the subcommittee, but also in the interim committee. We did have a couple of proposals that came out as standing committee amendments in the House. I think you need to be aware of those. They were adopted. One of them remains in the legislation, which was just clarifying on page 3. The second one was then removed on a third reading amendment by the inclusion of some new language that I think we need to have a conversation about. At the outset, I'm going to say that we don't oppose this bill. We have brought our concerns to you as the legislature over the course of the last several months, and we will take what becomes enacted. But we do want you to be aware of a couple of issues here. The first one, and I appreciate those the questions, Senator Rothfuss, that you had of the division. I want to make it clear that the products that we're talking about are that I think necessitated the 454 inclusion were the GAP waiver products and other ancillary products that are going to develop into the marketplace. And there's a lot of them. And keep in mind that this code does not cover warranties that act somewhat similar to those of GAP waiver. The interaction of GAP waiver products with your property and casualty insurance is kind of something new in the world in the last 10 years or so. But the credit life, credit disability, and the involuntary unemployment insurance or products, the credit life and credit disability have been around for ages. When I was in the financial industry, I actually worked for a credit union as vice president of lending here in Cheyenne, and credit disability and credit life are still being handled the same way. And I want to make that very clear. Those premiums are assessed on the outstanding balance of the loan. So if you accelerate, if you're the consumer and you accelerate your monthly payments on whatever the loan that is, the monthly premium that's assessed is on that outstanding premium. So when you're talking about a refund, and this is covered in Title 26, the Insurance Code, and also again in this title under the UCCC, those refunds are very de minimis. They are applied at the same date on a monthly calendar basis, and then if there is any refund, it's going to be very very small. And the consumers have been protected from Title 26 and Title 40 for decades in that realm. Involuntary unemployment coverage is a newer product, and it is not covered under the Insurance Code, but you can imagine that it works along the same lines, and that is if a peril occurs under those products, the coverage ends. You know, obviously credit life on termination upon death, you're not going to get any more premiums. Same with credit disability. There's two types of handlings on the credit disability, depending on what the consumer wants. You can have one that suspends your ongoing payments during that disability period. And I'm talking about the premium payments, not your loan payments, because that's the purpose of the credit disability product, is to cover your loan payments. Unemployment, again, is handled that other way. I wanted the committee and members to be aware of how these products work and what their different regulatory structures are between Title 26 and Title 40, excuse me. Going to the amendment that was adopted on third reading, you know, what we're introducing into UCCC is a definition of termination. And we were concerned that with the language that had come out of the interim committee included the word voluntary. What you're also creating in 454 is a duty by the creditor that is not necessarily a party to the contract, especially in the gap waiver products and the other ancillary products. They are not a named participant in that contract. They have kind of assumed it, and whether they've purchased the paper or they've sold it themselves, but there is a third-party administrator to that. So our concern was, when does that duty end for the creditor, for the credit union, the captive finance company, or the local bank? And so we asked that voluntary be removed from that, just again providing a little bit more certainty in what the termination definition is. That held on the standing committee, held on first reading, held on second reading, although there was a charge to an attempt to remove it. It failed, 28 aye votes, 32 no votes. And then this third reading amendment came back. There was a couple that I did support Representative Duncan's desire to just go ahead and strike that standing committee amendment on the language in Romanet 2 there. But that didn't prevail. Representative Stith's third reading amendment prevailed. And although not strictly opposed to it, I do want to just bring to the committee's attention the clunkiness by reading through it. Termination includes prepayment, and keep in mind that's what we originally started talking about here. The division brought this as prepayment only. I suggested to them that cancellation occurs many other ways than just prepayment. So another ways to terminate, of course, is upon default. And then this is the clunky language: voluntary discontinuance or cancellation by the consumer or other circumstances that end an agreement. There's two ors in one sentence. So what is it? I think that that could probably be cleaned up, but I'm not going to fall on my sword on this. I just wanted to, again, bring it to the attention of the committee and you members while it's moving through the Senate, that there is an alternate way to handle this, like 29 other states have done, and that is a model bill that's just going to strictly handle the gap waiver and the other ancillary products, if indeed the credit disability and credit life that's been working for so many years ostensibly without a lot of consumer complaints, if you want to let that ride. But with that, Mr. Chairman, I appreciate the opportunity. Again, I have no amendments today, and I'll stand for any questions.
Thank you, Mr. Pickard. Further questions by the committee? Senator Rothfuss.
Thanks, Mr. Chairman. Mr. Pickard, thanks again for all of the work that you've and time that you've put into this. With regard to the third reading Stith amendment, I guess I would ask if the clunkiness requires that we should fix it, if it's going to be fine, even though it's clunky, if there's simple, better language that accomplishes the House objective and makes it a clearer sentence. I'm just trying to contemplate what our best course of action is that would not aggravate the House, although we could do that too. But
Mr. Pickard.
Mr. Chairman, thank you, Senator Rothfuss. As I mentioned, I don't want to get in the way of this piece of legislation. I don't know how many pages it is now, 40, 60 pages. I have less than one page that, currently affects my clients because the division worked with us in the beginning, as you'll recall, to make sure that the federal credit unions were recognized as exempt in most regards because they're a federally chartered institution. So I want a working relationship with the division. We have had it in the past. We have currently. I think, Senator, if you want to clean up the clunkiness of that, it might be helpful to get with, to understand what is going to make it smooth on concurrence. I don't want to be the one that's accused of pushing this thing to a joint conference committee in an 8-day virtual session that is virtually impossible to have a robust discussion on something of this matter. So
Sure.
That's your prerogative at this point.
Okay. Thanks. Appreciate it, Mr. Pickard.
Thank you, Mr. Pickard. Any further questions for Mr. Pickard by the committee?
Thank you.
Okay, thank you for your testimony. Mr. Sandoval, we should have at least one person left in the waiting room. Miss Allen.
Good morning, Mr. Chairman.
Miss Allen, you have the floor.
Good morning, Mr. Chairman, members of the committee. Marcia Allen with the Wyoming Automobile Dealers Association, representing franchise new car and truck dealers. I've listened to all of the testimony, and instead of repeating a lot of things that you've already heard that was outlined by the division, I won't. They outlined our concerns pretty succinctly in the language on page 26, lines 22 and 23. That does shift, and that was not what our understanding of that language in the initial conversations was. So at this point, though, I don't know how to fix that or correct it, short of deleting those lines, and that doesn't go with what on that particular language. So we were not aware, at least last week when it came up, the dollar amount that is being shifted. It doesn't sound like a lot, but it is still a shift, and it was unintentional. That's where our biggest concern is. So I don't have any recommendations or changes that I can make to address that at this point, unfortunately. So the other piece I would just address based on the conversations is the $75,000 threshold. I would say that I have talked to our members, and they don't treat any of their transaction actions differently based on the dollar amount. If it's a $30,000 vehicle or a $80,000 vehicle, their process is all the same. They don't treat that any differently and believe that it is not regulated. So most of them actually don't even realize that that is there. So even when they're reporting on the fee part, they're including that in their payments to the fees that they're making to the division already. So, and I would just answer any questions if the committee has any at this point.
Further questions by the committee for Miss Allen, Senator Rothfuss.
Thanks, Mr. Chairman. Ms. Allen, does your constituency have an interest in seeing that $75,000 go up to $100,000 or anything along those lines? It sounds like they're acting as if it is, and I don't know what the number would be, whether it's 100,000 captures, 99% of transactions, or where it is now. I just know that you can now get plenty. I think there are plenty of vehicles on lots around the state that are hovering in the 75 plus to 85 right now, and that's not really hard to achieve. Does your constituency have any thoughts?
Miss Allen.
Mr. Chairman, Senator Rothfuss, no, we really didn't talk about increasing it. I will note that the federal requirements, which is where there's a lot of confusion with our membership, and as you know, this was an ongoing conversation throughout the interim with the working group and others. The federal level is actually much lower. It's $58,600 something. I'm not sure the exact amount, but I guess my point there is the fact that the members, the dealers, are not treating those any differently. Where you might run into problems if you increase that is maybe on the motorhomes and some of those really large purchases, and they probably are not aware that they need to be complying with the state statutes anyway.
Okay. Thank you.
Okay. Further questions by the committee? Okay, members of the committee, what's your pleasure?
Move the bill, do pass.
It's been moved by Senator Rothfuss and seconded by Senator Cooper. Do we have any amendments at this time?
Mr. Chairman,
Senator Rothfuss.
Mr. Chairman, I'm certainly open to contemplating an amendment to fix the language on the Stith Amendment, but I wouldn't want to dramatically change it in a way that did take us to the point where we had to go to a conference committee, and I don't know if it's worth it. So I'm not going to propose anything at this time, but maybe I'll reach out and see if there's an easy solution.
Okay, any further comments by the committee?
I think, excuse me, Mr. Chairman,
Senator Cooper.
I would have to agree with Senator Rothfuss on there. It just might be a good time to clean it up, but in this particular setting today, I don't think that's necessary.
Okay, I guess the acting chair would look forward to a possible amendment on the floor. I do have one technical correction offered by LSO staff. It is a technical correction. And on page 2, line 9, after days, delete of and insert after. And I would move that motion at this time.
Second.
Is there a second? Thank you. It has been moved and seconded. Comments on the amendment? Is everybody satisfied that it tracks?
Sounds good.
Okay. Question being called. All those in favor of amendment to House Bill 8, please say aye. Raise your hand. Aye. And it has passed. Those opposed, I guess it's unanimous. So the amendment has passed. We are back on the bill.
How did we miss that after the number of times that I've read that paragraph?
Yeah, that's crazy.
Question on the bill.
Question on the bill. Mr. Sandoval, would you call roll call, please?
Mr. Chairman, is my audio better?
Yeah.
Yes, thank you.
Thank you, Mr. Chairman. So a roll call vote on House Bill 8 as amended. Senator Anderson.
Absent.
Senator Beitman.
Excused.
Senator Cooper.
Aye.
Senator Rothfuss.
Aye.
Acting Chairman Wasserberger.
Aye. Thank you very much, Mr. Sandoval. House Bill 8 has passed, and I would ask Senator Rothfuss, you would be the floor sponsor of that bill.
Yes, indeed.
Thank you very much. The next bill for our consideration is House Bill 9, Short Time Compensation Program. Who would like to introduce the bill? Senator Rothfuss?
Thanks, Mr. Chairman. This is probably the most important bill we've got in the off season, and we put the concept together pretty early in the year as a response to COVID, and we didn't get it really done in the first session, our special session, but the legislation as an overview, and I don't know if we'll have Workforce Services to walk us through it. If not, I can walk through it as well, but it allows for utilization of our unemployment insurance in a way that many other states have taken advantage of, and the federal government allows as long as you fulfill certain obligations, prepare an application and work through the process, such that you can have what is effectively a part-time unemployed employee, assuming that you put a plan together and as a company that is looking to save money due to diminished revenue or whatever the other circumstances are, but the types of things that we certainly saw in COVID, allow the short-time compensation plan to provide flexibility where rather than laying off or firing employees, terminating employees so that they can receive unemployment, you can put a plan in where, for example, you have all of your employees in a unit go to halftime, as just one example. And then while they're on halftime, you still have to pay their benefits and maintain the benefit side of things, but you can have them be effectively on unemployment for the other half time. And that provides tremendous advantage because you don't have to eliminate your skilled workforce. You don't have to have all of your employees searching for work. You really can put together a plan that keeps the business going and thriving during times of hardship, where you keep your best people and make sure that their life is as good as it can be under that economic hardship, while at the same time, protecting employees, protecting the industry, and actually saving the state money, which is something else that ends up happening because these people are going to be able to go back to work just as soon as that position opens back up and the economic hardship ends, which leads to less total cost to the unemployment system and better outcomes for the state. So this is recognized as effectively a win-win-win. The state comes out better, industry comes out better, employees come out better. And honestly, it's just crazy that we hadn't adopted one of these policies before. It never really came up. But with the pandemic, we realized that we were missing a tool in our toolbox that other states already had in place. We tried to adopt a short time solution during the pandemic, which didn't allow us to get any federal funds with it. We had to have the full plan implemented to get to the federal funds aspect of it. And that's what this does. Mr. Chairman, one thing that I'll point out, I'm not seeing any attendees come in from Workforce Services, so I'll point out some of the keys here. This language is artfully and specifically crafted such that it comports with the federal application requirements or eligibility requirements for the program. So it's important that we not muck about in this without good cause and without really clearing any language changes with Workforce Services, because we would not want to break the eligibility of the application. It's an exceptional piece of legislation that honestly helps everybody, and I think we need to move this forward probably as the most important piece of legislation that we've got from the Minerals Committee. I don't know if we want to walk through it. I can try and jog my memory if we want to go through it at this point, but a hell of a lot of work went into the drafting of it. And again, it went back and forth with Workforce Services in the committee a lot of times during the off-season / interim earlier in the year, so that we could get this right. And it's up to you whether you want to walk through the specifics or not. I can probably recall all the provisions as we go through
it. Quite frankly, unless Senator Cooper would like a walkthrough, I don't think it's at this point. I think we should just go ahead and look at the bill. If we have a motion on the bill, or it doesn't appear that we have anybody in the waiting room. Mr. Sandoval, do we have anybody in the waiting room?
Mr. Chairman, we do not.
Okay. So I think we can go ahead and move the bill.
Okay, so moved.
Is there a second?
Second.
Funny thing about these motions, there's only two people can do them.
Yeah.
It has been moved and seconded, moved by Senator Rothfuss and seconded by Senator Cooper. Is there any discussion on the bill?
Mr. Chairman, just to add a couple of concepts that, there is a proposal process as we see for participation in the program. You have to make an application to the department. They'll review the application to make sure it comports with all of the provisions of the program. It very much protects the employees and then comports with the federal laws, but there are restrictions on how you can go about it. You can't do it very ad hoc. You have to have a plan, which is a big part of it, and include whole divisions. You can't use it in any discriminatory fashion. So there's a lot of federal strings attached with that aspect, and provide a justification for utilizing one of these short-term compensation plans. I'm just skimming through the actual language real quick. You can modify it, and if you aren't approved the first time, you can come back with another application. It's just sort of a process where, all right, you didn't get something that met all of the requirements the first time. Come back the second time, and we'll try and get you to the finish line with something that works. It can be revoked if you fail to comply with all of the provisions of it. There's some provisions about how it works with regard to availability of work and actively searching for work, and effectively the interface between the unemployment insurance and the employment time. And then there's a lot, as you can see, about the benefits and about preserving the benefits pay and maintaining the healthcare benefits, which is really a big part of this, obviously, for the time that you're working through this work share program. And I think that's about it. I'm not sure what I guess the last thing that I should have looked at before this meeting and didn't is, what did the House do? Very little. Okay.
Essentially, I'm sorry, Mr. Senator.
Go ahead. Go ahead. I'm done.
Well, essentially, I think that eventually we will have to send this bill to appropriations. There is a federal amount of dollars, 177,000, and I think 59,000 of that is to bring online the computer system, and then 118,000 goes to essentially promotion enrollment of employers and probably an AWAC position. But I think there is a part of the bill that states that when this program ends, no state general fund dollars will be used. I just don't see any downfall of starting this program.
Yeah, agreed.
It looked really good to me. All right, so we have a motion. Senator Cooper.
I just wanted to say that, for one thing, this three-man committee is promotes very efficient operations. But with that said, I think this bill offers a real positive tool for employers to hang on to their employees, and also for employees to be protected with continued benefits. I think it's just a real positive thing on both sides, and a very minimal cost to the state. So I think this bill absolutely needs to move forward.
Yeah, and I think also there's parts in this bill where if you are employed by two employers, you can use the total from that in a way to keep your benefits. So anyway, question on the bill.
Yeah, question.
Mr. Sandoval, would you call the roll?
Thank you, Mr. Chairman. This is a roll call vote on House Bill 9. Senator Anderson.
Absent.
Senator Beitman.
Excused.
Senator Cooper.
Aye.
Senator Rothfuss.
Aye.
Acting Chairman Wasserberger.
Aye.
Mr. Chairman, 3-0.
Mr. Chairman, I think we need to make sure that when this does get referred to appropriations, that we have workforce services knowledgeable about the timing of that, so that they can show up and answer the questions about the funding. I know that was the what was changed had to do with federal funds used for the position, and that it was a full-time position instead of an AWAC position. So there was a little bit of change of that. And it ended up being some positive changes. And then there was also some change with regard to the original language, which dealt with CARES funding and provided some flexibility. But we do need to make sure that workforce services shows up to appropriations to answer those nuanced questions, because I know I couldn't I couldn't answer those details.
Okay. I will make sure that happens. Who's the Director of Workforce Services?
What is her last name? Cooley? Yeah.
Oh, Robin.
Director. Yep. Director Cooley.
Okay, I'm sorry. All right, I believe we passed 3 bills. We have floor managers for each one. Unless there's further comment by the public, which I don't believe there's anybody there. This meeting, Mr. Sandoval.
Mr. Chairman, do you mind to stay for 5 minutes after?
Sure, I'll stay. Okay, this meeting is adjourned.